Hello, welcome to Financial Insider Weekly. I'm your host, Michael Gray, CPA. My guest today is Bill Mitchell, or William Mitchell. I'm going to call him Bill. And Bill is a certified public accountant. He represents taxpayers in IRS collections, audits, and appeals, and before the U.S. tax court. So he's one of an unusual animal, as we'll talk about maybe as we go along. As far as actually being licensed to represent clients before the tax court, and he's not a lawyer. He has offices in Santa Cruz and San Jose, California. Been licensed to practice before the United States Tax Court since 1978. Long time.
That's correct.
Yeah. Bill graduated from Santa Clara University in 1962. And after his service in the U.S. Army, he worked at the Internal Revenue Service from 1966 through 1971 and has worked in public accounting from 1971 to the present. And in his other life, Bill enjoys playing baseball. He's been playing baseball since, well, you said 10 years old?
Yeah, so that'd be about 60 years.
Oh my gosh.
Yeah.
Isn't that something? What's the name of the team that you play for?
Well, they're giving it a name. It's in Monterey. Probably they'll call it the Monterey Peninsulas. So.
Oh, okay. So anyway, so basically amateur baseball, it's good activity, and congratulations on being able to continue to do that. Your health has been good.
Yeah, I've been fortunate. Thank you.
Knock on wood. Huh?
Yeah.
Okay, so today I've asked Bill to provide some guidance about what to do if you're audited by the IRS. Bill, again, does a lot of work before the IRS, and so I thought he would have some particular wisdom to share with us about it. Has a lot of experience, as you can tell, a lot of years on both sides of the table. So as I do this, as we have our conversation here, just remember we're covering highlights of a complex subject, and the idea is this is going to be a continuing conversation that you're going to have with another tax consultant, or possibly if you decide to hire Bill or myself or whatever. So with that, let's get started. Bill, thanks a lot for joining me today.
Well, thank you for inviting me once again.
Okay, good.
Yeah.
All right. Gee, somebody gets a letter. Let's say it's me. I get a letter from the IRS. Is that a reason that I should panic?
Well, you can probably panic if you want, but it's not going to do any good. But generally, you know, when you get a letter from the IRS, it's not the last thing in the world that's going to be a catastrophe. So the big thing is to digest it, then find out whether you need assistance, or if it's just a request for information and you can do it yourself, then respond to that letter. The big thing that I guess I would emphasize today is the timely response to those types of notices.
Yeah, so this isn't something you want to sit on.
No, that's for sure.
Yeah. And I guess another thing in particular here is, the question is, have you filed an honest tax return? So if you filed an honest tax return, then maybe you've made an honest mistake, and the IRS can understand something like that.
Well, I always proceed on the assumption that the people I represent have filed an honest tax return. So, yeah. And by and large, I think most people do try to comply, but I guess every now and then if you have someone that's really going to excess in underreporting income or over-reporting their deductions, and possibly they might want to get an attorney involved so that they have the attorney-client privilege with respect to those issues.
Right, okay. All right, let's talk a little bit about why me, the selection process. Why did this tax return get chosen for some sort of communication or an audit from the IRS?
Well, it can be random. The IRS has various programs. Sometimes they audit certain industries. They go through the construction industry and have small construction companies being audited. Or they also have what's called a discriminant function score, where if your tax return doesn't measure up to what the norms or the averages are, then it might be selected because you have some item on your return that exceeds what they consider the limitations. And they may be perfectly all right, but they just want to inquire about it and find out that everything is supported.
So they have sort of guidelines about what they expect to see for certain deductions and so forth. And if something's out of line, then it's what we call a flag.
Right.
And so then they may ask some questions about it to see if in fact it's okay. Also, though, there are some things, again, as we say in general, that are sort of flags. And one of them, for example, is having your own business, a Schedule C, because frankly, they find a lot of errors with tax returns with
that's
those.
correct. Yeah.
And so, so they've found it's a fruitful place to do some prospecting, and so that's one reason why they choose those. And it's also one reason why some people try to get their business outside of their personal income tax returns. Okay, well, and like you said, sometimes they have a sampling that's going on. They're trying to find out, again, they're trying to reevaluate these discriminant functions. And so they're gathering information maybe by doing a random sample of income tax returns to try to generalize out about what to expect, maybe with changing circumstances over the years.
Right, those are called National Research Project examinations, where they're just trying to get the criteria that will go into the new formulas that they're trying to use. The other thing is that when I mentioned that there might be something that's out of the parameters of what's considered the norm, it doesn't necessarily mean that you should be concerned that that's a flag. If you've got support for the deduction or whatever the matter is, and it's well documented, then you shouldn't be reluctant to go ahead and report that as such.
Yeah. Another thing that's really common, and especially here in Silicon Valley, is matching type things. So there's a 1099 that's been issued. It's an information report. And for some reason, the IRS is having trouble matching what's on your income tax return with that report. And so, for example, here in Silicon Valley, a common problem is people exercise a non-qualified stock option, and they sell the stock. And that income, because they just exercised and they sold at the same time, the income really is included in their wages. But the IRS has received a 1099 for a sale of some stock, and they're looking for it on Schedule D. So the next thing you know, you get a report from them, and they're saying, okay, well, we got the sale here that's been reported, and it says that you've got a lot of income, and we're going to figure the tax on the whole thing because we don't know what the cost is, and we're waiting for you to tell us what are the facts. And in most cases, all you have to do is provide the information to them. You know, yes, I exercised this option. Here's a copy of the exercise statement. You know, in fact, the cost of the stock is the same as what I sold it for. So that's a very common type of thing. And those are what we call correspondence audits?
Correct. Those, and usually those are returns that are selected for audit because the taxpayer possibly prepared the return themselves and weren't sophisticated enough to understand that there was a capital transaction involved in it, and that's why the IRS is inquiring. But they can be somewhat alarming when you see the notice from the IRS and they're saying this is the amount that was unreported, and these are the tax consequences that result. So,
yeah, big tax bill.
Yeah, so you've got to be quick to respond to those.
Okay. So now I've got one of these notices. How do I decide whether I should handle this thing myself or get some help?
Well, in most cases, if it's just asking for information, I think you should be comfortable enough to answer it yourself. But if something comes back from that, other than things are just fine, then I think at that point the taxpayer might consider getting some professional assistance.
Mm-hmm. Now, what if you're having an office or a field audit?
Well, if you're getting an office or a field audit, that's where you're being, in an office audit, you're being called in to meet with the IRS representative. It's probably a good idea to have your tax preparer or tax representative accompany you to that meeting, because they speak in the same jargon that the IRS personnel does. If it's a field examination, which is a much broader audit situation, the revenue agent will come to your office or place of business, or to your tax preparer's office that's more convenient wherever the records are available. And I'd say in almost all field examinations, a taxpayer is probably better advised to get professional assistance.
Yes, okay. There's another thing. Well, if you decide to go ahead and do it yourself, if you will, there may come a time where the IRS agent is asking questions that you may not be comfortable with, and at that point, I think it's legitimate and perfectly okay to say, "Whoa, time out! I think I need some help here," and so maybe you can comment about that.
Yeah, well, that's correct. In fact, in the cases where I'm engaged to represent taxpayers, generally that's the point where I get involved, is that things are getting to the point where the taxpayer or even the taxpayer's tax preparer doesn't feel comfortable at that stage, and so they will request my involvement. And after I review everything, if it looks like I can be of some help, then I'm more than happy to be involved in that case.
Yeah, okay, good, thanks. All right. If I bring a representative, won't the IRS think that I have something to hide?
No, that's pretty common. In fact, in almost every examination, whether it's office audit or field audit, one of the things the IRS requests when a representative is there is a power of attorney to speak on the client's behalf or to support the client. And if it is a joint return, the IRS has implemented procedures now where they require a power of attorney from the husband and a separate power of attorney from the wife, even though it's a jointly filed return, to proceed. And once they do that and the power of attorney is received by the IRS, then if the taxpayer wants to just bow out and be in the background, the power of attorney representative is the person that speaks on behalf of the taxpayer and directly to the IRS. In fact, the IRS is required at that point to speak directly with the tax representative, and if they want to have some more information from the taxpayer, they can either use the tax representative as a conduit or they can ask permission. May I go ask Mr. Jones about this? And that's the way it's conducted when you have the representation papers in place.
Mm-hmm. So the power of attorney, so people know, it's like a 2-page form, and it basically says that I name Bill Mitchell, and he's got an identification number with the IRS. We call it a CAF number, that he puts on that form, and so then there's a notation that's made at the IRS that any correspondence related to this year for this taxpayer should go to Bill, a copy of it.
That's correct.
Yeah.
And sometimes inadvertently, the taxpayer's representative, who does have this power of attorney, may not be contacted directly as he should be. And those are always points that should be brought up to the IRS's attention, that once the client, for example, says, I received this bill and I haven't been advised of it as well, then you bring that to the auditor's attention, that they should make sure that everything's in place to keep doing this in a manner that's procedurally correct.
Right. One little issue related to power of attorney, I guess I'll mention an experience that I've had, is once it's set up, it's kind of hard to shake. It's and so I guess it's the taxpayer that really needs to initiate terminating that. So you and I, when I try to get rid of the IRS, won't do it.
That's true. I mean, you can represent somebody, and maybe for years thereafter you'll be getting additional correspondence if there's some lingering issues on that tax year, and maybe the matters have all been settled. It might be a collection matter at that time, but you're still being included in the loop, which is good in a way, because that way you stay advised in the event that you're called in again.
Yeah. Okay. Well, who is qualified to represent a taxpayer before the IRS, and what does a representative contribute to this audit process?
Well, you've got enrolled agents, actuaries, CPAs, attorneys, and now we have registered tax preparers, all who can represent their client at the audit level. Once you get beyond the audit level, if the audit doesn't come to a resolution that's satisfactory to all, then it goes to a higher administrative level, and then generally it's CPAs and attorneys. Enrolled agents can still participate, and I believe actuaries.
Okay, so this is sort of the traditional group,
right?
And then the IRS has recently initiated another process to try to clean up the tax return preparation industry, and so they have registered tax return preparers, and that's still in process. There's going to be examinations for these people, but this is basically, these are like the storefront tax return preparers, the H&R blocks, and so forth. And quite often they have like an enrolled agent that's running the office anyway, or supervising.
Right, so they have someone that can represent.
Yeah. Okay. So what are some of the roles that the representative has as far as, again, in this representation process?
Well, once you submit the power of attorney forms and meet with the IRS representative, I guess the roles and the rules that go on are, where are we at where is the background on this? Where are we with respect to this audit? And are we having any legal issues that are in an unresolved place, or if there's certain factual concerns that haven't been fully developed, then those are things where the representative can lend some real benefit to the situation and getting the matter resolved.
Right. So there's a few things or thoughts here. One is that the representative, and particularly when you have an attorney involved, needs to be aware and alert for protecting the rights of the taxpayer. And sometimes there are things, maybe there's questions that the representative doesn't really think is appropriate that the IRS is asking, and may need to advise the taxpayer. Now, CPAs, you and I are, I mean, you have more experience in this area, again, in being licensed to practice before the tax court. But anyway, there's some times where I feel that we really need to get an attorney involved that can say, okay, wait a minute, there's a line here that you're crossing, and to pay attention to that and protect the taxpayer in that way. And there's also the matter of privilege, like you said.
Right.
The attorney has a special kind of privilege that as CPAs we don't have. And you need to be careful that that privilege doesn't accidentally get waived.
Correct.
And so an attorney can give you some real good guidance in that respect. The other is, in particular, again, we're talking about people like Bill, because he does audits regularly. When it's sort of a routine, then you have a comfort level. You're not intimidated by an IRS agent. And whereas the client, again, doesn't speak the language of the IRS, they're not familiar with the process, dealing with something that's very foreign to the client, the taxpayer. And so, again, unless it's a very straightforward type of a matter, it may be that they'll be much better off having somebody that understands how this all works take care of it. Did you want to make any more comments?
Yeah, well, one of the questions, it's a very common question you get from clients, is when you're pre-meeting, before you meet with the IRS representative, is the client will say, what should I say? And the answer is the truth. You know, just be forthcoming, and the truth is the strongest representation you can have. So, and if there is something where a question is out of line because that the auditor might be asking that really doesn't bear on the matter at hand, then you can interrupt and say, hey, that question is inappropriate. Like if your client has paid someone and they ask a question, well, did that someone report the income that you paid? Well, that's not your client's concern, hopefully that the person has, but the issue has to do with your client and not with the other person. So that's where you can bring in some interruption to the proceedings. Say, you know, that's not something we're going to deal with here.
No, there's nothing. You brought up an interesting point, though, and when you began the conversation or your comments, and that is in the preparation before the audit. Mm-hmm. So this is really something that the representative can really help, is anticipating what does the IRS agent or franchise tax board agent, whatever, what are the things that they're likely to need to see in order to substantiate. Usually they give you, when you have a field audit, a list of issues that they want to look at. So you can help the client in assembling their documentation, and if you can have things in a very orderly way, really that shortens the audit right there. If the agent feels, oh, everything's very organized, and they may even, you know, feel that they don't need to go through all of the issues because you answer so clearly and quickly, you know, maybe some of the major issues that they had, and they can fold their tent and leave.
Well, that's correct, but also the other side works too. If you appear to be disorganized and not have all the information, then they will expand their audit and say, okay, you were wrong here, you're wrong here. Just where else are we going to find things that are incorrect?
Right.
So
I guess
it
my
works
point
both
is,
ways.
Yeah, and so my point is, though, is that that's why, though, it's better to do it at the beginning,
right,
even before you meet with the agent, and maybe have like a pre-audit meeting with the representative, even if you're going to go and try to take care of it yourself.
That's correct, so, because the agents do the same thing. When they're assigned a case, they do what is called a pre-audit analysis before they ever meet with you. So if they're doing it, it's probably a good idea for the other side to be doing that as well. And the other thing is that you can't anticipate everything that the agent or the auditor is going to ask. That's been always an amazing thing to me, is you'll have everything in order and you will fulfill their documentation request. And here comes another question that you couldn't possibly have anticipated, so you just have to react to that as things go along.
Okay. I started this audit myself, or with the tax return preparer helping me. At what point should I seek additional help?
Well, I think we covered that a little earlier, is that when you reach an impasse where there's some issue that is controversial and in a civil sense, not that there's any bad or criminal charges, but there may be tax court cases bearing on that particular issue, that decisions in one circuit go one way and decisions in another circuit to the opposite. So those are the type of instances where it may be a good idea to get additional support for the audit.
And maybe I'll go a little further. If it does look like there's some sort of indication that the IRS has some sort of an interest in a criminal matter, then you really do need to get...
Right. Well, if it's going to be a criminal matter, generally you're not looking at one revenue agent. You're looking at a revenue agent and someone with him who's, they used to call him special agents or intelligence agents. Now I think the name is special agent. But if these people are accompanying the revenue agent, then for sure you need legal assistance. You know,
if they're carrying a gun, they're a special agent.
Right.
Okay. Okay. Actually, we're getting a little long in line. Let's see here.
Well, getting back to the special agent real quickly, is that when I was a revenue agent, I had a case once where it was called an intelligence agent in those days, and this particular intelligence agent had a real history within the service of being very direct. Mm-hmm. And so we met with the taxpayer. He explained, he said, Mr. So-and-so, Mr. Mitchell is here to determine your tax liability, and I'm here to see if I can put you in jail. So, and with that, the taxpayer looked at him, shook his hand, and he said, we're going to get along just fine. So that's the type of directness you might get sometimes. At least that was in my era. I don't know if they would be that direct now, but it's still a matter where you have to have legal representation.
Okay. We're going to have another interview with Bill talking a little bit about what happens after, so I'm going to skip any material there. Now, Bill, if the audit notice specifies a date and a location, are you required to accept those?
Not necessarily. If it's not convenient for you, you can contact the revenue person and arrange something that's mutually convenient in a place of meeting that's convenient, and generally the service is very cooperative in that regard.
Okay. Well, we only have a couple minutes left. Maybe you'd like to just share some final thought or two about audits in general and advising people.
Yeah, the idea is to respond promptly and to get as much documentation together so that, as you mentioned, that if everything is in good order, then the audit will be shortened and the agent may just limit the audit activity to those items and say, hey, everything is coming up to the mark, so that's fine, and move on. And the other thing is to be prompt, because sometimes there's glitches after an audit's completed. If it's a no change audit, then you should get a report to that effect that your audit was found to have no change in tax. If there is an unresolved issue, then you want to avail yourself of possible appeal circumstances, and there's all kinds of glitches that can happen once an audit's completed by the various notices that the IRS sends out, and so you should be attentive to all those types of notices and not let them say, oh, the audit's over, this doesn't mean anything.
Yeah, okay. So pay attention as things are going along. Well, folks, we hope that you've given you some things to think about, to be aware of related to tax audits. We don't want you to be terrified, but we do want you to be a little bit alert and think about getting help. It can be well worth it for your peace of mind. And we'll see you next time on Financial Insider Weekly.